The S&P 500 and Nasdaq snapped their longest winning streak in 2 years as Fed Chair Jerome Powell says the Fed may not yet have done enough in the battle against inflation. Bond yields surge and are now at around 4.63%. Stocks in the Asia-Pacific come under pressure on the Fed Chair's hawkish commentary, the GIFT Nifty also indicating a lower start for the Indian market. Crude recouped some ground after the week's sell-off. Brent recovers about 0.5% to trade at $80 a barrel. In key earnings to track today, Eicher Motors, M&M, Coal India, Hindalco and ONGC from the Nifty 50 will report their second quarter numbers. From the broader market, also track numbers from Hindustan Aeronautics, Tata Chemicals and Glenmark Pharma. Hey guys, good morning and welcome to Power Breakfast. First off, let me begin by wishing everyone a very, very happy Dhanteras and then Diwali as well. We do hope from everyone here, the CNBC TV 18 family, that you have a beautiful upcoming new year and a prosperous one as well. So we're going to be helping you with that all through the day, bringing you the best voices, bringing you all of the opinion, which will hopefully help you in that endeavor as well. But that said, let's kickstart the day by taking a look at what's going on across global markets. The handover, like I pointed out, from the US has not been very good. We did end with cuts. And on the back of that, you have most Asian markets which are trading lower today. So Japan really leading the losses right now. That is down around 280 points. It is still solidly up for this week. So it's still up 4.5% for the week. But today you're seeing some pressure over there. Seng and Taiwan also on your screen. Hong Kong markets down around 280 points. You have the Taiwanese index, which has lost 0.3%. So there is weakness across Asia on the back of what we saw coming through from the US. If I look at some of the others as well, Straits, Kospi, Shanghai, all trading with some amount of cuts as well this morning. The GIFT Nifty will come up for you, and it is indicating that after that 50-point kind of fall that we got yesterday, the implied open for us is sharply lower right now. So around 100 points gap down is where we could start. But let's also talk about the US now, because Wall Street ended lower on Thursday. S&P 500 ended that 8-day winning streak that we've been talking about. Dow lost over 200 points, and the tech-heavy Nasdaq also fell almost 1%. So 130 points gone on that tech index. Now, what really happened there was that the yields rose very sharply. So the 10-year was up more than 12 basis points. And this big fall really came through after that Fed Chair Jerome Powell's speech last night, where he said that Fed officials are encouraged by the slowing pace of inflation, but they're not sure whether they've done enough to really keep the momentum going as well. So the market didn't like the sound of that, and you did get that fall coming through after this speech. Now, addressing the audience at the International Monetary Fund in Washington, he added that more work may be needed in order to bring the inflation under control. CNBC's Steve Leisman is here with all of the highlights from that highly watched speech. Steve.
If it becomes appropriate to tighten policy, that further, we will not hesitate to do so. The Fed will move carefully, he said, judging risk of over and under tightening. The Fed is making decisions meeting by meeting. In his speech, he would also say, we will keep at it until the job is done. Those are words he's used fairly frequently. Inflation, he says, is well above target, and the Fed has a long way to go in terms of getting it back to the 2% target. On the economy, he'll say the labor market remains tight, though supply has improved and demand has eased. He expects growth to moderate in the coming quarters. He does note growth has been strong in the third quarter. He is attentive, he says, to the risks of stronger growth that could undermine the inflation process. Stronger growth, he says, quote, could warrant a response from monetary policy. And while he called policy restrictive, he said the Fed is, quote, not confident, end quote, that the Fed has achieved that sufficiently restrictive rate that he's been using before to say when the Fed has reached the right level of interest rates. Ongoing progress, he says, to the 2% target, quote, is not assured. Inflation is being brought down by the end of supply distortions and tighter monetary policy. But he says it's unclear how much more the Fed will be able to achieve or the economy will achieve in lower inflation from those supply side improvements. And the implication of that, he says, is that it may have to rely more on monetary policy. Too soon to say, he says, if the Fed no longer faces the challenge of zero lower bound. This is more longer term part of the speech. And the Fed will consider when it does its review of its overall strategy, whether the pre-pandemic low interest rates can return or whether we're in a regime of higher rates more permanently. So maybe a little more emphasis, guys, on the possibility of a rate hike in these remarks and the idea that the Fed is not confident that they're on the road to to a 2% inflation.
All right, Steve, thanks a lot for taking us through all of the highlights that came through from the Fed Chair's speech last night. But let's also bring you a word from Meera Pandit, the global market strategist at JP Morgan Asset Management, talking about her views on the probability of a rate hike by the Federal Reserve. Listen in.
You could have a hotter jobs report next month or a slightly hotter CPI print. We just don't know how the data is going to continue to evolve. You hear Powell and you hear other members of the Fed with mixed commentary. We're not hearing a lot of conviction and confidence that inflation is where it needs to be. And so I still think about that September dot plot and that one potential more hike, whether it's December or January, not off the table yet. And that is contributing to all the yield volatility we're seeing because there's not a clear direction of travel yet. So whether it's stocks or bonds, I think it's a not so fast market.
All right, that is some important opinion that we are tracking. That's what we're looking at globally. But let's now talk about our own markets and how trade could really pan out today. We have our research team here to bring you the trade setup. Ekta, Mangalam, and Surbhi are all going to help us out with that. Guys, a very good morning to you and happy Dhanteras to everyone as well. Ekta, let me come to you first. The way the global cues are right now, Asia is sharply lower as well. Definitely looks like the start will be lower for our own markets.
Well, thanks for that. And yes, hopefully that festive cheer will probably overpower any kind of negative global cues. But nonetheless, yes, as of now, it indicates that maybe it could be a lower start for us. But yesterday, just to recap, the markets remained in a range and they closed with minor cuts. We had the Nifty Bank, which gained around 25 odd points. But overall, what we have seen is that the Nifty has been unable to cross that 19,450, 19,500 levels on a decisive basis in the past 4 to 5 trading sessions. FIIs continue to be net sellers, so they net sold around 1,700 odd crores. DIIs net bought around 1,500 odd crores. So net institutions were sellers in yesterday's trading session. Hawkish comments from Powell are going to weigh on our markets as well. So oil prices, which could probably cushion any kind of fall, are around $79 to $80 per barrel. The US markets, they did correct after S&P broke what was its longest winning streak since 2021. Asia lower after Powell's comments, and the gift Nifty indicating a bit of a weakish start as well. A lot of results: Biocon, Coal India, ONGC, Eicher Motors, Glenmark, SAIL, just to name a few. There are a lot of numbers from the broader markets to watch out for as well. And in terms of Nifty levels, we've been tracking it in the past couple of days, the 20-day moving average, the 100 DMA, as well as the 50 DMA. So these would be important points to track. But nonetheless, yes, global cues could weigh. Let's see whether we manage to shrug it off with some festive cheer.
All right, let's hope that happens. Ekta, thanks a lot for that. Let's also bring Surbhi in now, who's looking at all of the stocks that we should watch for in today's session. Surbhi, like Ekta was pointing out, there are a lot of big earnings which are expected today, but a lot of important ones which came through yesterday as well, post-market close.
That's right, fag end of the earnings season and a lot of numbers that we'll be reacting to. The first one will be Z Entertainment. The numbers are better than expectations. Revenues are up 20% on a year-on-year basis. EBITDA is up 6%. Margins have come in at nearly 13.6% versus our poll of 11%. Muthoot Finance, the numbers are below our poll, and the net interest margin, it has a 5-quarter low. The net interest income is at 1858 crores and PAT is at 991 crores versus a poll of 1043 crores. Aurobindo Pharma, the numbers are better than the poll. Revenue at 7,220 odd crores, EBITDA at 1,374 crores, and margins at 19% versus a poll of 17.4%. Torrent Power, it was a steady set of numbers. Revenue up 4%, EBITDA up 5%, and margins up 20 basis points. RVNL, the revenues were flat on a year-on-year basis. The EBITDA was down nearly 6% and margins at 6.1% versus 6.4% same time last year. We'll also be reacting to numbers from Senco Gold, BEML, Piramal Enterprises, and Aditya Birla Fashion, just to name a few.
Okay, thanks a lot, Surbhi. We're going to watch out for all of these stocks in today's trading session. Finally, it's over to Mangalam, who's looking at cues from the futures and options space. Mangalam, this is the last trading session this Samvat, other than the Mahura trading that we will get. What are the cues looking like today?
Well, the cues are looking not so good when it comes to global, but locally we've seen dips being bought. Yesterday was a very range session. In fact, the Nifty was ranged between the 100-day moving average and the 20-day moving average. As you can see from the highs and the lows of yesterday's trading session, sub 100-point range is what the Nifty had from the high and the low. It was also understandable given it was weekly options expiry, so a lot of straddle writers were hoping for this range trade itself. Now with the GIFT Nifty suggesting a near 100-point downtick at the open, the question is whether we see a purchase from the lows and go back up to the 20-day moving average or not. The other thing that happened was yesterday the cash market selling by the FIs increased to around 1,700 crores as well after a couple of days of that reducing to sub 500 odd crores itself. The FI long exposure still at 19%, 81% positions are on the short side. So any recovery would lead to these shorts covering their positions. But for options that expire next week, 19,500 call has seen a fair amount of writing. That also has the highest open interest. So that's one important mark to watch out for on the way up. 19,400 call writers as well. After yesterday's trade, got a little active for a premium of 125 odd rupees. And there has been some writing at the 19,400 put. That makes the 19,350 to 19,325 mark extremely important in terms of a support. So what is it that the options are suggesting? Resistance upwards of 19,500 on the Nifty, though given the GIFT Nifty cut, it looks unlikely that we go all the way up to there. But lower levels, the market's likely to open in support zone. So the question is whether we see buying out there or not. For the Nifty Bank, the 20-day moving average is something that we conquered yesterday. On the way up, 50-day moving average is something that we'll be watching out for. And it's a stock-specific market, a lot of stocks in focus. MCX has entered F&O ban.
Okay, Mangalam, thanks a lot for laying out all of those cues for us. For now, it's a full 100-point cut that we're seeing on the GIFT Nifty. So let's see if we can really move past that and move up from that level during the course of the day as well. But with that, we're going to get into a short break. There's lots more news and updates coming up for you. We're also going to get you a word from some market veterans on how things could look in the coming year. Welcome back. Since the festive season is here and we want to ensure that you have a very prosperous and profitable summer 2080, we have been speaking to a lot of market voices. Prashant spoke to Ramdev Agarwal, Group Chairman and co-founder of Motilal Oswal Financial Services, as well as Manish Chokhani, Director of Enam Holdings, and discussed investing in India's financial sector. So listen in to what they had to tell us.
The amount of money which is going to go into financials is just so staggering that whether now it's a bank, whether it's a capital market player, whether it's a stock exchange, which you've seen what's been going on with BSE, MCX, and just watch what happens when NSE lists over here. So there is so much plethora of options over here that you pick. Like I gave you a menu, you think public sector banks, are they going to repeat mistakes which they made 10 years ago? I don't think so. With credit bureaus coming, with the people making 17-18% ROIs, they can't be trading at half-time book.
Okay. Top bets, just to close that.
Just take financials.
It is a financialization part, but the intermediaries, they are driven by digital business model because you cannot handle millions of guys physically. Okay, so it's all through the digital platforms. So whether you see the broking platforms, I mean, I remember in 87 when we started, 200 crores was the daily turnover. And there were 500 brokers and that settlement used to be painful on T+15. And actually the settlement used to happen in T+21. Okay. So that was the kind of thing. And now you're talking about T+1 and probably 0. T+1. And what is the turnover today? It is 250 lakh crores per day. I have not seen any industry which has expanded 1 lakh time in 30 years. Now the run rate is 3 million per month. You can do your numbers. We are headed to become 500 million demat accounts in next 10 to 12 years.
All right, that is the big bet on the financials in India. But we do need to take a short break. On the other side, we're tracking all of the cues from the commodity markets. We'll also bring you an update on the situation in West Asia. Hey guys, welcome back. You're still tuned into Power Breakfast. Let's get a check on what's going on with the commodities now. Manisha joins us. Manisha, take us through what's going on with crude, but also what's going on with gold, because today is Dhanteras and we want to know how the prices are.
Oh, absolutely, Pavitra. Very happy Dhanteras to you too. And if you bought gold last Dhanteras, you would be sitting on a good 21% profit right now. So that's the kind of return gold prices have given to you. As of now, of course, we're trading at a 3-week close off the highs, and that is because we've seen hawkish commentary come in from the global central banks. US, Ireland, these two central banks officials have spoken in this week, and there are chances of more rate hikes, and that's what's bothering gold. Apart from that, the weekend geopolitical risk from the Israel-Hamas war also seems to have taken the premium off the prices, and that's exactly what is bothering the crude oil prices also. We are headed for a third weekly decline in case of crude. The easing concerns of supply disruptions in the Middle East, demand uncertainties in US and China, and weak trade data and inflation numbers coming in from China also have led to decline in crude prices. So a weaker opening for both of these commodities.
Okay, Manisha, thanks a lot for getting us all of those details on what's going on with the commodities. But with that, let's move on and also bring you updates from the conflict in West Asia. According to the White House, Israel has agreed to suspend fighting for 4 hours a day in order to allow Palestinian civilians to flee from northern Gaza. However, Prime Minister Benjamin Netanyahu has reiterated that there will be no ceasefire until the Hamas release the hostages. Meanwhile, Palestinian officials have said that an Israeli attack struck the yard of a children's hospital. The exact number of casualties are still awaited, but nearly 11,900 people have been killed from the war, which is now entering its second month. All right, that is the situation in West Asia. We're going to keep bringing you updates on that front through the day and through the coming weeks as well. But with that, we're going to have to wind down in this edition of Power Breakfast with the news that there's really no respite in Asia right now. Pretty sharp cuts coming through, at least for markets like Hong Kong, like Nikkei as well. And the implied open for our own markets is a full 100 points lower. So we're definitely going to get that gap down start. But let's hope the market realizes that it is Dhanteras and that we can make up all of that. Thanks for tuning in. We have Bazaar Morning Call on the other side of this short break.